Hello and welcome to MasterChartsTrading.com market recap for the weekend on Friday, April 24th, 2015. This week stocks broke out to new highs and on pretty good breadth as well. Bonds broke support and took some of the interest rate sensitive sectors with them. And we'll look at ITB, the home construction ETF. We'll look at some of the current market leaders and I'll highlight one of the trades we did for Electronic Arts. Looks like bigger downtrend in gold is pulling Trump again. And we'll also look at oil, which is consolidating after a 30% counter trend move. And finally, we'll highlight a bearish divergences in XLE, the energy sector ETF. Okay, let's look at stocks. So S&P 500 large cap index. The important feature of this chart is the general uptrend. This is a 50-day moving average, 200-day moving average, 50-day moving average. 50-day moving average is above the 200, and we're at new highs. We closed, I believe, at new closing high. This is an all-time high, but this is a new closing high. So definitely a bullish chart. We held support right here and then bounced off of it. As far as the market breadth, the advanced decline line is confirming higher highs, and it hasn't confirmed yet to 987, so there is a very mild divergence here, but I think that it will eventually catch up. And then also we are on a market breadth buy signal here, and here you can see the momentum of the breadth oscillators are on the buy signals as well, and there are definitely more highs than new lows, so that's a good sign. I wanted to point out one thing. This indicator called an unbalanced volume. It just basically adds up a positive and negative volume cumulatively, and you can see that here in December, when we hit a new high, it was confirmed by a new high in unbalanced volume, but so far we have not seen a confirmation in volume for the S&P 500 specifically. You can see that it was a higher high here, but the unbalanced volume actually kind of trended lower, and the same thing happened here. So not 100% what it means, but it could mean that the volume needs to either catch up to the actual index, or it could also mean that we could be correcting sometime in the future. However, let's look at QQQ, PowerShares QQQ Trust, NASDAQ 100. Again, new highs, gap up. Today was a gap up and then continued higher, so very strong. The SCTR rank for QQQ is almost in the in the 90s. Also, the advanced decline line is confirming new highs by new highs in the advanced decline line as well. As far as the momentum oscillators, they are positive, in the positive territory, and we are on the breadth thrust up as well. And then you can see here on balanced volume, you can see that it's an uptrend, and I believe this is a new high here. So as far as QQQ is concerned, the unbalanced volume is okay. So I'm not sure if I would read too much into S&P 500 slightly underperforming as far as volume goes. So as far as market timing for this is QQQ, our buy signal for QQQ was back in March 16th, and since then up about a little bit more than 4%. Elsewhere, TLT bonds, you can see that broke support on Wednesday. It was a nice big drop here. And this is not bearish, but because overall TLT is in a bigger uptrend, so you can see the 50-day moving average is above the 200-day moving average. But the fact that it broke the support and has been under pressure, like it made a lower high right there. So money is rotating out of bonds. You can see the SCTR, it was way above 90 here, and here it was very well performing security, and then now it's dropping in the 40s. So it's definitely underperforming relative and relative underperformance, and also absolute, the chart as well, it's underperforming. Now there's resistance in this 129 area, and you can see it already. It tried to rally, but it sold off today during the day. Okay, next, since bonds are setting the rates for interest rates, and this is a Dow Jones U.S. Construction ETF. I think there was a miss in the number of home constructions, so this ETF, gapped down, and I think it's related to the TLT, because if the interest rates are low, that means more people can afford the house, and if interest rates are going to move up and bonds move down, then less people will be able to afford the house. And in this case, ITB may continue to be under pressure as well. You can see the SCTR also dropped. It was one of the leaders, and now it's in the 50s. The SCTR is in the 50s. I mean, it's still a bullish security, but it's just not one of the leaders, and it would make sense to be investing in the leading securities. And same thing for on balance volume. You can see it was interesting underperformance. You can see that it was the security was moving sharply higher, but the unbalanced volume was actually trending lower. So it could be like one of the tells to give you a caution about the future direction of the security. And okay, so next, since, for example, ITB is no longer one of the leaders and TLT is no longer one of the leaders, what are the leaders right now? And I wanted to highlight a couple of sectors which are definitely in the leadership positions. So TAN ETF, solar ETF, broke out. It was actually bearish here in end of 2014, beginning 2015, and then broke out and turned bullish and became one of the market leaders as well. In fact, it was such a strong move that so far truly there was not a good buying opportunity to be had. And of course it's very overbought, because there's a lot of speculative money moving into it, and also because TAN solar ETF has a lot of Chinese stocks in it as well. So if there is any pullback in solar stocks, and the SCTR remains above 90, I would be definitely interested in buying this fund. But right now there's just no opportunity for me, at least. So next one is Chinese stocks. This is one of the better performing Chinese funds, ASHR. You can see there are some decent buying opportunities here back in October, another one in February, and then another one in March. And this move is just tremendous as well. And of course it's overbought, and if you're reading the news, then you probably heard about how there is rampant speculation in Chinese markets, and people are borrowing money to stay in the markets, etc., etc. So this is bubbles can go on for a long time, and like if you go look back to the tech bubble, it continued for a while before it actually popped. And same thing with this Chinese, stock market. It's definitely in a overbought territory. possibly even in the bubble territory, but it will continue up until it stops. And for now, it's one of the market leaders. The SCTR is definitely above 90, and I'll be looking for a pullback to try to re-enter this market. And you can see on balance volume is clearly pointing up, so there's definite strength within it as well. Another sector you may know is biotech. Similar picture, very strong. You can see SCTR has been above 90 for the at least 6 months, possibly more. And here in March, late March, beginning of April, we had a pretty sharp drop here, but then the buyers stepped right in and pushed the prices higher again. And on balance volume is confirming the advance as well. Also wanted to highlight one of the trades we did here at MasterCharts Trading. That's what I was talking about, is that, so this is electronic cards, very strong stock. So you can see SCTR is above 90. In fact, it's at 99 right now, so it's very strong. And there was really no opportunity to re-enter, to try to partake in this uptrend. And finally here, there was a decent sell-off in April, and this was just a great entry opportunity, and we went ahead and took it right there at $57, and then immediately the trade just went our way, and electronic cards moved to new highs. So definitely a quick, nice move, and we already moved our stop to entry, so we're at no loss. Now, electronic cards reports on May 5th, so I will be looking to lock in some gains before the report and possibly completely exit, depending on where we're at. Because sometimes the reports are negative and the stock can gap down, and those gaps can wipe out any gains you have very quickly. Okay, next is gold. So gold is, as I repeatedly said, is in a downtrend. You can see gold, the prices are moving from the upper left to the lower right. We had a nice bear market rally that started in March. Went all the way up to 50-day moving average, and then there was this big rejection candle right there on April 6th, and this was like a first clue, and it's like a shooting star with a confirmation the next day. But those I need more confirmation, in other words. So we look at our system, our trading system. Our trading system gave a go on the 24th, I believe. And in the next chart, I'll show GLD, Gold Trust ETF, with a short signal that was generated on April 22nd. In fact, we had another short signal here on March 30th, but this was, oh, I'm so sorry, I meant to say there was another short signal right here on April 14th, but this signal was not confirmed by the gold miners, and I did not take this opportunity. This signal, on the other hand, on April 22nd, was indeed confirmed by the gold miners, and I'll show you on the next few charts what I mean by that. So, per our trading system, we went ahead and took this short signal in GLD. So, next chart, I'll show GDX Market Vectors Gold Miners ETF. Has all the big gold mining stocks, or rather larger cap gold mining stocks in them. One of them is actually Newmont Mining, which today was pretty impressive gain. And Newmont Mining, I believe, is like the only stock which is bullish within the sector. All of the rest of the stocks are bearish. And what I mean by that is the American traded ones. I'm not talking about the international ones, because GDX has quite a bit of international stocks in them as well. But in any case, GDX, so first of all, bearish security. 200-day moving average, 50-day moving average, clearly 50 days below 200-day. The SCTR is below 10, so it's a weak stock, very weak stock. So here in mid-March, we started a nice rebound, and I mentioned this repeatedly, that this is a bear market rally rebound. We rallied exactly to the resistance, and resistance from this gap down, the $20 area. Touched it once, touched it twice, rejected right here in mid-April, then moved down since then steadily. Our trading system gave us a short signal, and the next chart I'll show you. I'm sorry, I meant this chart I'll show you. Same thing on the 24th of April. Together with GLD, we got a short signal in GDX as well. Let me go back to GDX and I'll continue with this. So there are several bearish setups here, I guess is the word. So this formation looks like a rising wedge. So a big decline and a rebound. And this looks to me like a rising wedge. And the wedge break would target the move, I would say, to at least this area here, possibly to new lows even. So we haven't gotten the wedge break yet, but I think that if we get a close break around here, around $19.25, $19, that would confirm this wedge break. Hasn't happened yet, but we are already short on the 24th of March. Okay, and also, so we have inside day. Yesterday's range was inside the days before range, and today's range was inside yesterday's range. So it's kind of like a triangle consolidation. And this is kind of like a 2 inside days in a row is very powerful combination. And if we break down here, I think we'll get a pretty powerful move down. And up here, there's plenty of resistance. And, as before, like I said, this is a bearish security, so a bearish resolution is more likely. And several other things that point down in prices. Advanced decline line, advanced decline volume line, on balance volume. You can see they're hitting new lows. Here in mid-April, they're already at new lows. While in mid-April, we're actually moving up here in price. This is telling me that the underlying internals of the gold miners are quite bearish. Bullish percent index still at 30, and actually today we got a new low, new low. So that's important. You can see we had no new lows or new highs for quite a while, and now we got a new low. So that's definitely something to consider. We're playing this particular down thrust in gold prices through GDX, market vector junior gold miners, and like I'll show you back here, we still have an inside day and it was not broken down yet. But look at GDX, it's already broken down. So GDX is more volatile than GDXJ is more volatile than GDX itself, and you can see it's already breaking down. So then similar picture with unbalanced volume. It's moving down and it's very weak stock, 1.4 SCTR. Okay, and then finally I'm gonna wrap up with United States Oil Fund, oil. So oil moved from mid-March until mid-April. It was a really powerful move, 30% move here. So if you're lucky enough to catch this move, especially with leveraged funds, that's, it's like a home run right there. But consider the fact that this is a bearish security. SCTR is 1, is basically at 0. The 200-day moving average is above the 50-day moving average, bearish security. So I think that we're getting to the resistance area right here, and if we get a breakdown here, we could easily move to $18, and if that doesn't hold, we can retest the lows again. It hasn't happened yet. We didn't get a signal just yet. But as I explained with the gold and gold miners, this is oil, and kind of like oil miners or oil producers are all within the fund called XLE, Energy Select Sector SPDR. So there's some big oil companies here, etc. And similar picture, it's a bearish security, and it was a really nice rebound here. But unlike oil itself, USO, we have some more information about the XLE, because we also have the internals or unbalanced value, or rather advanced decline line, and momentum oscillators for it. So I wanted to highlight a couple of things here. First of all, XLE is at resistance, and you can see here these long wicks out of the top. They're like selling tails. They're rejection prices have been rejected here at about $83 area. Also, bearish, I wrote about this in my separate post, but there is a bearish divergence here. So advanced decline line, even though the price went higher, the advanced decline line actually went lower. So the same thing with unbalanced volume is even though the price went higher here, the unbalanced volume actually went lower. What that means is that smart money is distributing. The stock is being distributed, so volume is higher on the downside, and we are already getting a breadth thrust down. So this is ITBM, intermediate term breadth momentum oscillator for XLE. You can see it already rolled over below its 10-day exponential moving average right here. As far as the volume momentum oscillator, has not yet rolled over, but we're very close. So a rollover here could be something similar to this event here, like in late February. You can see once the breadth momentum rolled over, we had a nice thrust down. And similar here, look at this. It was a huge gap down right there. So if oil even rolls over a little bit to the downside, XLE will surely follow. And I think that, with all of these bearish divergences, this could definitely happen sooner rather than later. Okay, looks like that's it for this week. I wanted to show you how to find us on the internet. So please go to MasterChartsTrading.com. We have trading alert services, and I believe we have a good chance to start the alert services next week. We have pretty much everything in place. So please do sign up for our mailing list, and you'll be the first ones to get a discounted deal on the trade services. Please take a look at our blog. I post all of the information that I talk about in the videos there. In this video there's also a video section where I post these videos. If you have any of the following accounts, then you can follow us on Twitter, Facebook, YouTube, or StackTwits accounts as well. All right. Thanks for listening, and have another great trading week. Bye-bye.